Hi traders, welcome to this video update with me, John, on the live currency strength indicator tables on this Friday, the 18th of August. So, had a pretty decent trading week this week. There has been some changes over the sort of last night or early evening yesterday into last night. You can see the yen is here as the third strongest currency. So we had a little bit of a switch in that risk on risk off tone. We were very much risk on yen, selling the yen. That changed last night going into a couple of risk events, and we saw the yen start to flip over, which had a couple of interesting developments with our trades. So pound still technically topping the tables. We had some poor retail sales data out this morning. Pound did sell off because of the back of that, but it's now come back to S1 again. Aussie is the weakest currency and Kiwi's the second weakest. So, you know, pound Oz, pound Kiwi, something that we've been trading. And the dollar is the second strongest currency here. So looking for potentials for some dollar downside. I particularly like Kiwi dollar and Aussie US dollar, just where they are, where they're reacting to the market at this current moment in time. So let's dive straight in. Let's have a little bit of a review of what we kind of did this week. One of those trades that we did this week was Aussie Swiss, the Swiss franc, very much a bullish currency. That kind of changed yesterday. So if you see here, S3 was the Swiss, S3 on Thursday. By the time Friday or today has come around, the Swiss franc has left the tables as a strong currency. So yeah, Aussie Swiss definitely had a good move to the downside. We were short in at 56, around 56.97, ended up banking for around about 72 pips after price pullback. Now the full target was 56 flat, but we didn't quite make it there. We got to about 6 pips within that profit target, so that's why I kind of exited my position there. We came very close to targets. You know, unfortunately, sometimes price doesn't get to these key levels that we're looking to do. In fact, you know, if I was to look at it again, 56 was here. If I'd placed my targets at 56.10, I would have been very comfortable with that. We would have been taken out there for full targets anyway. So, Aussie Swiss, nice little move to the downside. Really happy with that position. We did take a position on pound Kiwi. Pound Kiwi was the sort of, I'd say, one of the highlights of the week, really. We've had a really considerable upside. So we were talking about getting in long at this level here. If you were a little bit early to the party, you could have gotten a little bit earlier, but essentially looked at price coming back into these prior swing highs. We had the 50 MA here. We also had some support from a Fibonacci retracement tool, so just through there, the 61.8. So we had multiple confluences to suggest that the market could continue to trade to the upside. If you did get long in here, you're currently about 147 pips up. At one point, we're around about 200 pips up. So depending on how you want to play this market now, the target, it's obviously a little bit higher, which is that 2-spot 1570. Actually, the first target was 2-spot 150. So if you did have that position in here, you have banked 180 pips in profit. If you hold it open, so you know, looking for the potential for further upside, then we're looking to see if price can break a little bit higher. The alternative to that is kind of coming up here right now. We can see price has come back into support here, back into the 50 MA, back into trendline support, and has rallied here. So there may actually be a possibility of getting long again, pound Kiwi, from an hourly perspective. One thing I would say is obviously we've already gone through this market and took quite a considerable amount of pips out of it. If you look at the daily, we are very extended here at the moment. Doesn't mean that price isn't going to trade higher. I'm just looking at it from a risk reward perspective now. The 215.70 was really pretty much the limit I would go with because of the weekly chart here and that spike high. So if we take that into consideration and we look at it from a risk reward perspective now, we would be looking to potentially enter at 21.486. It does recommend 150 pip stop loss, but you know, this is a high ranging pair, so high pip pair. So if I was to look at 150 on the stop loss, it would be all the way down at the 2133. I wouldn't necessarily go for that. I'll probably be looking for stops below the low, but the problem with that is that's a 92 pip stop for an 84 pip target. So the risk reward there has gone. I'd much prefer, now that we've banked the position here, I'd much prefer to go look at the New Zealand dollar against the US dollar. If we go take a look at that market now, we can see that price has been trending to the downside for a considerable amount of time. We've recently broken through key areas here, one of those areas being this previous structure point where we traded through the lows. We were talking about the 0 spot 59 or 0 spot 6 handle coming into effect. So, but the 0 spot 59.90 is where we did find resistance. Price has then broken, traded through lows. We've come out and look how it's kind of bounced off the 50 MA there. Now, if you take a look at closer at what price has done recently, we've had the rejection of the 50 MA and price did start to break lower a little bit. I like the idea of being short at 59.26. Well, I am short at 59.26. Currently in 3 pips of profit, was in about 12 pips of profit. The reason why I like this one, although the market is still technically overextended here, we have the bearish channel support coming through here, which is formed from that weekly move. I also like the idea of potentially price coming into 58.50. You can see we've got some support and resistance going on through there. So although the market may be overextended, there still could be a little bit of a room to go here. So I do quite like the idea of being short there. Well, I am short there. Looking for price to continue potentially down into the 58.50 now. Risk reward rise, that gives us a potential 76 pip gain. We're looking at our ATI, you can either have a 60 pip or a 36 pip. I've gone with the sort of shorter, well, just over the shorter period there, about 42 pips. Basically just put it above that prior high. Now, if I look at it and we say, well, okay, you know, price on the downside move here, I'll pop a trend line through here. I'll pop a couple of trend lines in actually. So you have this trend line there and I have another trend line here. So I'm looking at this because we are overextended. I'm going to put a little bit of a filter on it to say, well, if the market rallies, let's say, and we trade through the 50 MA, we close above the 50 MA and close above this trend line, you know, that's my first warning sign that price might not be considering continuing to the downside. If we breach this trend line here and this prior high, I think the trade's pretty much over at that point. So we'll probably exit early after that area there. What I would like to see happen is price trade through these prior lows, obviously, because that means we'll be in profit, but it means that also that the downside momentum is continuing, and what we can do then is look to reduce stops from this area here, bring it down into those prior highs, and then just track it as it goes. So if we do see maybe another sort of pullback and a continuation on the way down, then maybe we can look to consider to bring stops to break even or bring it in profit then. So that's what I'm trying to look for here on Kiwi US dollar. So yeah, I'm already in at short around about 59.26, but we'll see if that can continue. The other market I really did like was Aussie US dollar as well, very similar to Kiwi dollar. The only thing with Aussie US dollar is we are at a little bit more of a support point. If we look at this weekly chart here, I've put in a long-term trend line which came from the low all the way back in March of 2020. It then dissects or connects with price here at the in October of 2022, and we're back at that point. So this is quite a significant trend line support, I would say, for the Australian dollar. I like the potential for the market to move to the 0.63, maybe even to the 62 handle, but we are just kind of coming into that support zone now, so maybe we'll get a little bit of a bounce here. Obviously, looking at it from an hourly, it looks really good as well. It's hugging that 50 MA. Every time we kind of rally into it, we get a rejection. So there is still some possibility here that, you know, maybe price will continue down again, pull back, 50 MA might roll through. We may get another connection there, another retest, and another continuation point. Very, very similar to New Zealand dollar. You can actually get a bit of a tighter trend line situation going on through here with the kind of point of this high coming through on the 10th of August. If you follow that down, you can see we've actually had multiple rejections from that recently. So I think if price was to pop through that level, pop through the 50, close above, then I think the idea becomes invalid at that point. So I'm just going to add that as a catalyst on there as well. So yeah, but I do like that downside there. I think Kiwi dollar's just got a little bit more about it, to be honest. Although Aussie is the weakest currency, Kiwi's the second weakest, and I think there might be some opportunity to develop in here. Thanks for watching the video content this week. I hope you've enjoyed it all. I hope you managed to gain some pips from it as well, and I'll catch you in the next video.